Hello traders, Gary Wagner with the Gold Forecast. This is a special edition of the Weekend Review, Friday, January the 28th, here in Honolulu, Hawaii. We do have gold trading all over the board for the last couple of days, down tremendously yesterday, up today about $21, currently was up about $30. On today's report, we're going to be taking a look at the big picture. We're going to be looking at our forecast over the next 3 to 6 months, as well as the next 3 to 6 weeks. We're looking at a microcosm and a macrocosm all here on today's daily report, this special report. We really need to gain that clarity. And to do that, I had to go back to basics and take a look at where we are in the big picture. Now, what we are looking at, this is a Henkin chart. It is a weekly chart, and it is a weekly chart in which we have put our large Elliott wave count and taken that to our current day market. And that's this chart right in here as I bring that in. And for those of you that follow Elliott wave, you realize that within each major wave, what he calls an intermediate or a minor, is a smaller subset of waves. So that when you look at the Elliott wave cycle itself, it's composed of course, impulse corrective total of 8 waves, 1 through 5, A, B, and C. But within each of those waves is a set of subwaves, so that between 1 and 2, you will get a set of subwaves. And of course, between 4 and 5, you will get a set of subwaves. So that typically what you will see at the impulse component of our Elliott wave is a 5 count. So you will typically get 1, 2, 3, 4, and 5. Then you will go into a corrective phase. Of course, the corrective phase, this would be between 1 and 2, is simply going to be A, B, and C. So that's the subset of waves. Now, the reason that that is so important is as we take a look at this market, the market, of course, has been on a 10-year full-blown super bull cycle. We need to ascertain where within the big picture we are. And that's what today's special report is all about. This, as I said, will be an extended report. It will take some time, but I promise you, traders, by the time you are done viewing this particular report, I truly believe you will have absolute clarity as to where we are in the market. First, we need to take a look at the big picture. In terms of the big picture, when we look at our count, we are at a major 5 count. This major 5 count started back in October of 08. In which we had, in terms of major waves, 1, 2, 3, 4, and 5. So that in the big picture, when we look at it, we finished this top. This was that triple top. In the big picture, we are currently in A. We will then get our B, and then finally our C to finish the correction. That is where I believe we are currently in. When we take a look at this chart, which we have converted here to our daily chart, what you can do is we can then take a look at what is called that subcount. So that between waves 3 and 4, as you can see, we get our typical 3 count, which is our A, our B, and our C. Then from 4 to 5, we're going to get our larger 5 count. 1, 2, 3, 4, and 5. So that what we are looking at in terms of the big picture is that when we hit this triple top, we not only had a intermediate wave count of 5, the letter V, but we also had our minor count of 5, which put us at a double top in terms of the Elliott wave count within the market. So where are we currently trading at? Well, from this, on the big picture, we are now in the big wave A. That is here. Now, realize, traders, that wave A is going to be composed of, again, those 3 corrective waves, A, B, and C. So that it is my belief that as we finish this larger A wave and finish this smaller C wave, we will then enter part 2 of the correction, which will be that large B wave. So we will get an uptrend, but that uptrend will not be the major trend of the market because it's going against this correction. We will still have to weather a large wave C before we go back into the impulse cycle all over again. Traders, sometimes we need to be shaken to the core before we can actually go back and take a fresh, serious look at the marketplace to gain that clarity. I absolutely believe that the chart that you're looking at is going to give you that absolute clarity. When we take a look, as I said, at that big picture, you can see between 1 and 2, you have that corrective A, B, and C. Then, of course, 2 to 3, we get our 5 count. 1, 2, 3, 4, 5. At 5, of course, we enter our corrective phase A, B, and C, which takes us to the current cycle that we entered. 1, 2, 3, 4, and 5 ended right here. This was that, of course, pinnacle, that 1431, that record top that we hit at the market. At that point, my belief is right here we entered our corrective phase. Small cycle, A, B, and C. Larger cycle would put that at A. The question is, has C and A ended? Are we going to go into our immediate B wave right here? Our B wave should be composed of, in terms of a small count, 1, 2, 3, 4, and 5, and then our final corrective C wave down. The question is, have we found that bottom? Well, to ascertain that, where we found support here, if you take a look, this 1305 is a 23% retracement in terms of the big picture. And when I'm looking at the big picture, what I am looking at is the beginning of this large move here all the way up to the top. That's going to give us our 23% there. If we look at this, we are at a 50% retracement at 1394. So there is possibility for a little bit more room to the downside if in fact we haven't seen that bounce now. There's a good chance that we have, but in terms of our strategy, I am absolutely clear in terms of where this market's going to be headed over the next interim basis. In other words, what I am looking at is if in fact we finish this corrective wave A down, this wave from large 5 to large A, if in fact that's ended, we will go into our B. Our B is typically going to be anywhere between 50 and 75% of this move here between large 5 and A, and then we will get our correction. Our correction can be anywhere between, depending on if it's a flat correction or if it's a deep correction, can be anywhere between 1 times the move that you've witnessed from 5 to A up to 2.4 times. So that's the big caveat. One thing that I am absolutely clear about at this point is that we are still following this bullish cycle up. We have entered a major correction. We have weathered this first A wave, and whether it is now or over the next short-term interim future, I believe that we will see this A, if it hasn't ended already, completely end, and then we will go into, in terms of our major count, our B. Now, once we hit our B, as I said, then we've still got to weather one more corrective wave down, which is going to be our C. If it maintains its bullish stance, it still has the opportunity to hold within this trend line that we're looking at right in here and still correct within the market. Of course, once that happens, my belief is we will go into yet another impulse phase, and that will consist of 5 large waves back to the upside. Traders, this special report was designed to give us the absolute clarity that we need as we go ahead and plan our upcoming trades over the next weeks and months ahead. We needed and now have the clarity that we need to know, in terms of the wave count, where we stand in the big picture. This will allow us to correctly and succinctly look at these peaks and valleys and have a sense for the overall direction of where the market's going short term as well as interim term. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you on Sunday for a daily report. Bye-bye.
I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life. And that is why I succeed.